Hi everybody, hope you're doing well. This is Angel with Succeed in Finance. Thank you for visiting our channel, and in today's video we are going to make a short analysis on the two main indexes, Dow Jones Industrial Average and S&P 500, and we are going to try to make some forecasts. What do we expect to happen over the next couple of weeks or even months? So let's jump into it. If you have watched my previous video, we know how we consider the movements on the stock markets. Since the 23rd of March, we experienced a very good uptrend and this continued until 10th of June. And I would like mostly to stress on this movement, what happened between 10th of June and 15th of June. It happened this very strong down movement. It was expressing short selling of stocks, and this movement is going to be, in my opinion, very important from the standpoint of Elliott wave analysis, and also from the traditional technical analysis standpoint of view. What do I mean? Until here we saw a very good, as I said, upward movement, an uptrend, but in terms of what we expected to see, an impulsive wave that is going up. In other words, 1, 2, 3. In other words, we expected to see here a third wave, extension of a third wave. This actually scenario was broken because of this movement. What do I mean? I would like to stress this down movement even more. Let's take a look what we see here. We see clearly 1, 2, 3, the obviously extended third wave, and then fifth wave. So it is a similar position here in the Dow Jones. Let's take a look at this movement. You can see here clearly 1, 2, 3, 4, 5 wave. This impulse right here, and that is in this position after this construction, upward construction, is a sign that the market is obviously not ready for full recovery. As we discussed before, and you've seen in many analyses in internet, that many analysts expected quick recovery, V-shaped recovery, etc. But obviously this is not going to be the case, because this impulsive wave in this position, it's a sign that most probably this is just the beginning of something that is going to last a bit longer. This is the beginning of some downward correction movement, and it's going to last at least time period that is going to be relatively comparable to this period of time since the bottom of 23rd of March until this stop on the 10th of June. Let's take a look at this. I'm going to put here the cycle. I'm going to try to do some cycle analysis. What is a cycle analysis? It measures the timing between important tops and bottoms on the market, and in this way we can see we can foresee in the future, and trying in an attempt to predict when is going to be most probably the next important bottom or top on the market. So we see I would say because as I mentioned, we expect that this is the scenario that most likely is going to happen. In other words, we are going to experience over the next few weeks or a month some downward movement that is going to last, in my opinion, at about the 10th of July or even until the beginning of August. Actually, I expect mostly this movement, this downward pressure of selling stocks to be expressed not so much as deeper correction, not so much as stock prices to go down, but mostly as a sideways. In other words, we are going to experience some ups, some of the stocks are going to go down, some of the stocks are going to go up in their prices. But this is the indexes. The indexes they represent the movement of stock prices of many stocks included in this index, and this what we have to do during this period of time. It's the so-called period of restructuring of the portfolio. If you are about to enter the market during this period of time, you have to be much more selective, to be more picky. You have to be careful what you are going to buy, and even for those of you who have already opened a position, to really seriously take a look at your portfolio and if necessary to get rid of some of the stocks that you have and to consider buying some other stocks, or whatever the situation is, up to you. But be more careful, because what happened with Hertz, you see, in my opinion, the Hertz is not going to be the only one company that is going to go to bankruptcy. Obviously, this pandemic is going to have more huge impact over the entire economy. If we analyze what happened since the beginning of this pandemic crisis, after the first down movement and the shock on the market that was expressed by this short selling, and until the moment of 23rd of March, when was announced by the Fed that they are going to step up on the market, they are going to do whatever it takes just to get back the things to normal. And obviously their actions bring us to these results. But what I'm trying to say is that somehow this upward movement, this uptrend, is actually expressing mostly nominal recovery. But now the time has come just to see the real economy, how fast is going to recover from this recession. Because let's take a look at the bigger picture. Most of the analysts that they discuss the V-shape analysis, the V-shape recovery, actually what do they mean? They mean that we expected that this fall down is going to recover pretty quickly, and the market is going to move like it did it during this period of time, let's say in 2019. But I am pretty convinced, because of latest development, as I said, and this downward impulsive wave is a sign that actually the market is not ready for full recovery, and it's going to take a bit longer. And during this period of time is going to happen the so-called restructuring of the indexes. Some of the companies may go to bankruptcy. Some of the companies are going to pop up. But most important, speaking in general, I do not expect over the next, as I said, couple of weeks or even months to see any substantial new all-time highs. At the moment, many companies have really attractive prices level, but we have to look also at the fundamentals. Okay, guys, I hope you found any value in this video. Please hit the like button, subscribe to the channel to support us, and I wish you all the best and see you in the next video. Take care.